A lot of people don't realize this when they inquire on a down payment assistance loan. I like to encourage people to not just focus on the interest rate, but focus on the overall goal, which is finding a product or a solution to get you into your first home. One of the hurdles that can hold up first time home buyers in getting into their first home is saving up their down payment money. I find that first time home buyers that apply with a lender, sometimes they're just told to go save $20,000 or $30,000 and then come back when they have that money saved. That could take some time for some clients to get that amount of money saved, where in the meantime, they're missing out on building up equity in a property by property appreciation if they were to get into a home without having to wait to save that $20,000 to $30,000. We're going to go over a scenario really quick where we're comparing a loan where a client has a down payment versus a loan where a client does not have a down payment. To add to that, there are down payment assistance programs that are typically focused around affordable housing and helping lower income households get into a home by utilizing their down payment assistance. But oftentimes we find that the parameters on those down payment assistance loans are pretty strict. So it limits the amount of people that are able to utilize down payment assistance funds, especially the state driven programs. We find that to be the case quite often, where maybe the credit score requirement is higher or the income limit is too strict, where the client has to make under a certain amount of money to use those down payment assistance funds. So we actually have an in-house down payment assistance program without an income restriction and without a credit overlay above and beyond our standard FHA requirements. So that's kind of nice because most of these down payment assistance programs have overlays when it comes to income and credit. So let's go through a side-by-side scenario here. So on an FHA loan, the scenario we're going to run is a $350,000 purchase price with an FHA loan over here. So the loan amount would come out to $343,660. Let's say someone was getting an FHA loan right now, a common interest rate is right around 6% or so. And that gives them a payment estimate of about $2,564 a month. And then I've got a breakdown of that payment in here. So here's this payment estimate. It does include principal and interest, mortgage insurance, property taxes, and homeowners insurance so that we have a complete picture of the total payment obligation that this client would potentially be getting into in this scenario. And the cash to close here, so we can see it's a little over $22,000. This is a overall complete picture of cash to close to give us a realistic idea how much the client would be on the hook to pay if they did not have any seller credit towards their closing costs. So if they were paying their own closing costs and their own down payment, this is how much money the client would need to get into their first home if they were doing a standard FHA loan without down payment assistance. So down payment is set at 3.5% of the purchase price, so about $12,250. Estimate for closing costs of about $7,000, and an estimate for prepaid property taxes and homeowners insurance of about $3,000. So prepaids are items paid at closing for property taxes and homeowners insurance. We pay those at closing so that the client's paid in full on both of those items. And the portions that are collected in the monthly payment are preparing for next year's bill for property taxes and home insurance. This is kind of a complete depiction of what a $350,000 priced home on an FHA loan would really look like for a client trying to get in their first home. We find that not a lot of first-time home buyers have that $20,000 saved that is in this particular scenario. Well, as a solution that we can offer, if the client doesn't meet the income parameters or credit parameters or whatever the restrictions are on some of the state-funded assistance programs or state-sponsored programs, what we can do is look at an FHA loan with down payment assistance, the in-house one, because it does alleviate the need for those extra overlays and requirements that can often hinder clients from being able to use down payment assistance. DPA is the abbreviation for down payment assistance that we use as lenders. This is also a $350,000 sales price so that we can keep this an apples to apples comparison here. One thing you'll notice off the bat, the interest rate, if you were not using down payment assistance, probably around 6% or so right now. Interest rate with down payment assistance is around 6.75%. So you are going to typically you're going to see that you're going to get into a little bit higher interest rate on your mortgage when you utilize down payment assistance. A lot of people don't realize this when they inquire on a down payment assistance loan. I like to encourage people to not just focus on the interest rate, but focus on the overall goal, which is finding a product or a solution to get you into your first home so that you can reap benefits of building property appreciation and all the other benefits that come to owning a home. Payment estimate in this scenario is a little bit higher. We've got that interest rate that's a touch higher. And in this particular situation, the down payment assistance loan does come in a repayable format. So it's a 10-year repayable format at an interest rate that's 2% higher than the interest rate on the primary loan. So when you're using down payment assistance, you're actually taking out two loans. So you have your standard loan, which is your FHA loan, the primary mortgage here with this payment, the $2,732 a month. And then you have a secondary loan that gets put into place, which is the amount of the down payment assistance. And then that loan has its own payment. And then as you can see, it's coming out to about $154 a month for the payment on that loan. It is a 10-year loan as a second behind your primary loan. So it does go into place, but it's not a 30-year loan. The primary loan is a 30-year loan. Just a quick breakdown of the payment again right there. And cash to close estimate. So basically, with the down payment assistance option, the total cash to close is similar to what it would be in our original scenario over here. So we were around $22,000 in cash to close. Once we switch over to this program, the closing costs are a touch higher on a down payment assistance program oftentimes. And so the total cash to close is going to bump up to around $23,000. However, we do have that assistance loan that's coming into play here. So once we take that off, it's bringing the client's cash to close down to more like $11,000. That cuts it basically in half from the original scenario on the left. As you can see, the monthly payment is higher in this option. So if you're one of those people that did save your down payment, or you were able to save 20 or 30,000 or so, you probably wouldn't necessarily use the down payment assistance program so that you can get in with a lower monthly payment. But if you don't have those funds saved and we want to find a way to break into home ownership and not wait for that amount of money to get saved, a down payment assistance loan is a viable option. We have quite a bit of clients that utilize this to get into their first home. And then in the future, once they've built up some equity, they can refinance down to a lower rate and kind of get this total overall payment back to a more ideal scenario. This program is designed to get you into your home. So in the future, if we did look at doing a refinance to get your rate down and get your overall payment down and all that good stuff, we would encumber these loans into one loan when it came time to do that. It might take 3-4 years, maybe 5 years to get to a point where a refinance makes sense for you. So you do want to make sure that you're comfortable with these payments when you close on the purchase. But just know that it doesn't mean that you're necessarily stuck with this for 30 years. At some point in time, once you've built up some property equity and whatnot, and as long as interest rates are favorable and all that good stuff, there is a way to restructure the scenario that you use to get into the home in the future through a refinance. So yeah, this is a great option. It does bring our cash to close down quite a bit, down to the 11,000 mark. And then, one thing I'll mention real quick, when you hear people say things like, oh, I got a home and I didn't have to pay anything, there's so many ways that could be accomplished. And there are other programs out there too. Some of them don't have a payment on the second loan here, but that kind of falls back into most of the programs that don't have a payment on the second loan have income restrictions or credit restrictions or debt to income restrictions, certain things that are going to hinder you from being able to utilize their program. So this program that we're going over is a way to still get down payment assistance if you're not that perfect candidate that they're looking for. Back to when you hear someone say, I got into a home and I didn't have to pay anything. Typically in that scenario, what happens is the client would have utilized the FHA loan with down payment assistance or a zero down payment program, something similar to where we could get that down payment portion built into the loan or through a second loan or something like that. When that's the case, what's basically left is the closing costs. And closing costs apply on mortgages in general. That's what's left here is this $11,000. Now, you are allowed to negotiate closing costs with a seller when you write an offer on a property. So if you were like, okay, I'm going to try to do an FHA loan with down payment assistance. So my down payment is covered through the assistance loan, but I don't have the $11,000 for closing costs, but I can save $1,000 or so. Then in that case, we would have you save your $1,000, and then we would make sure that when you write an offer on a home, we would want to communicate with your real estate agent that you're looking for a $10,000 seller credit toward the buyer's closing costs, which are your closing costs. If you were able to get that $10,000 seller credit negotiated, that would go towards this 11,000 number right here. So if that was stated in your offer that you were getting 10,000 seller credit towards your closing costs, and then you saved your 1,000, that's basically the extent of the cash to close that would be required on the loan. So in that case, you would be able to be one of those people that said, I got into a home and I really didn't have to pay much. So it is feasible to get into a home without needing a large amount of money saved for your cash to close. It just takes some strategic planning and program options that are going to be able to accomplish that for you, and then working with an agent that can try and help get some closing costs negotiated in your offer and all that good stuff. I hope this was informative. There are so many ways that you can utilize an FHA loan or an FHA loan with down payment assistance or a zero down program to try to get into a home. And it's one of my passions is going through these numbers and breaking it all down.